So let's see in the chat, how you guys doing? I want to see an emoji that expresses how you're feeling about the year, right? This is the last Wavecast we're going to do of 2022. So how are you feeling about the year? I want it expressed in an emoji. One emoji that expresses the sentiment, your feeling, how you feel for you 2022 has been. Let's see in an emoji. There's 11 of you here. That means I need to see at least 5 of them before I'm gonna continue. Can you guys see me okay? This light isn't working very well. See if that should work okay. Set up a bit. That should be better. Yeah, I look very dark on my screen, but hopefully you guys can see me okay. Yeah. Raj Kumar, his mind's been blown this year. Janus feels this year's been going pretty slowly, I think. I need 3 more emojis before I continue with the Wavecast. Martin's been working on his laptop the whole year. I know how that feels. Is this light working? Should be fine. That's 3 emojis. We need 2 more. There we go. There we go. Shirley's loving it, and Shaman's feeling like a lion, and Marcus is on the run. All right, wicked. So there's 13 of you here, and this is the last Wavecast of 2022. And the next time we come together, yeah, I wonder where the market's going to be in what's that? In 3 weeks, I guess, maybe a couple of weeks, in 3 weeks. I wonder where the market's going to be. I wonder where crypto is going to be. Let's have a look in TradingView and see if we can see something. So, all right, cool. So this is my current wave count that I've got with Bitcoin. So let me just kind of walk you through it. Here we go. All right. So I've left all of these pitchforks up on the screen just so I can kind of talk you through it. What I've got here, in fact, what I'll do is I'll take this one off quickly. Yeah, and I'll leave that one on. And I'll also leave those on. And then I'll make this one blue. Okay. So this has been the pitchfork that I've been looking at. In fact, let's make this one green. So you might remember from last week, Alex, I think I shared this last week, right? We've got our regular pitchfork, right? And price came up and pinged our regular pitchfork perfectly, right? Absolute perfect market geometry. And then price came back down and it pinged. This is a modified shift pitchfork, right? Modified shift. And the reason why I chose a modified shift is because the current wave count, at least at the time especially, had this at an A, B, and then we'd be expecting a C. And so if you're in a correction, then a modified shift pitchfork is the same thing as, if I get that right, as a corrective channel. If I just get that right, there we go. Right. So we can see it's exactly the same as a corrective channel, except with a modified shift pitchfork, we can add our warning lines, so we can see how this geometry continues off into the future if price breaks down above or below the outer boundaries of the channel. And so once price hits the pitchfork and it starts to come away from it, personally, if we're within a correction, the first thing I do is I put on the modified shift pitchfork, and the price comes down, bounces perfectly off the median line of the modified shift, and then we start to price comes up, and then we start to sort of make our way sideways, and that's when I start adding these sliding parallels, and you can see that the sliding parallel there, because that's the extremity of price within this modified shift pitchfork, and so I copy that sliding parallel the same distance that it is away from the upper parallel below the median line. That becomes a phase shift sliding parallel, and price finds some support really nicely on that sliding parallel. And you can see, for those of you who've got to module 20, when I talk about energy points, we've got a really nice energy point around about there. Let me change that to support. We've got a really nice energy point there where the phase shift sliding parallel meets the lower parallel of this regular pitchfork. And then we've also got a really nice energy point. I think I showed you guys this last week right here, where the median line, this thick purple median line, is this median line here, right? This purple median line here. Price has been it pings the lower parallel of this lower parallel of this modified shift pitchfork, which is a much larger scale pitchfork. These are the 12-hour bars, right? So this is going this low right here, although it's not a low, you know, given the current time frame. But that point right there is June, right? So from June, all this price action here, price came down and pinged the lower parallel absolutely perfectly, right? A great example of market geometry. And then price started to move sideways and up, and it came up and hit this this median line beautifully, and this energy point was where the lower parallel of this pitchfork met this the purple median line, right? That was a beautiful energy point that price just got sucked into. So I'm gonna make that a really strong one, and that's going to be resistance, right? And now let me see, it's the 12th now, so that means we would have last spoke together like this on the 5th, I think. And so the 5th was around here. So yeah, so we must have spoken last time. We must have done the Wavecast together when price had just come up into this energy point. And now look at what price has done. Price has just been going sideways. And one thing I did do, and this is actually something I did today, is this modified shift pitchfork is interesting, and we can see price bounced off the lower parallel twice right here. So the modified shift pitchfork is definitely useful. It's definitely interesting. So I'm definitely keeping it, and we can see that price came up, and it was the same distance both times away from the median line, and price came back down. It broke down through the lower parallel, and as it came back up, it found resistance on the lower parallel of this modified shift pitchfork, right? So it's definitely useful. I'm definitely going to be keeping it. All I want to do, I'm going to stick this pitchfork and all of these sliding parallels in a folder, so we can easily turn it on and off. Where are my sliding parallels? There we are. Okay. That shouldn't be in there. Where's that one? Let's bring that out. We've got one more to put in there. There we go. Sneaky one down there. Let's bring that in. One more. There we go. Okay, that shouldn't be in there either. Okay, we're good. And I'll pull that blue modified shift pitch fork. Okay, I'm going to turn this off for now. And what I added today is a shift. So we've got our modified shift, And then we've got our regular shift. Now, this is not something I would do first when I'm doing when I'm looking at what I believe to be a correction. I'll do the modified shift because that's your regular corrective channel. But you remember, if you've got to module 19, the shift pitchfork, I use that when we're looking at a potential weak correction that is not going to reach the next outer boundary of a modified shift pitchfork. And so when I put on the shift pitchfork, we can see price is responding to this really nicely, right? Price came up and it hit. Look at this. This is such a beautiful energy point. It's like a perfect, precise energy point. I'm not going to have it as thick though, because both these lines are going in the same direction. But look at that beautiful geometry, right? The upper parallel and the median line, it just hits it like a bullseye. And then price comes down. And if we look at the modified shift, yeah, it's like price comes down. It doesn't look like it's respecting it. But the shift pitchfork, again, we can see it kind of almost ping it, almost hit it. And we can see price starts to climb up. And it's following the geometry, I believe, more of the shift pitchfork. Price comes up again, and it almost pings the upper parallel of the shift pitchfork really, really nicely. And so we can see price breaks that back down. And then, in fact, this is something I'm just seeing right now. I haven't looked too hard at this. I just added the shift pitchfork, and then I thought we'll talk about it on today's Wavecast. So as price is unfolding, if this is something that I would have done as it was unfolding, I've been working on module 21. So I haven't looked at this chart too much. So this is great because I can get to do it live with you guys. So the first thing I'm going to do is, in fact, if I just get rid of that and I zoom in, as this was unfolding, this is what I would have done, right? We can see price is finding these support levels here. And we can see it's in line. It's relatively following the same geometry as this median line. So I'm going to create a new sliding parallel, and let's just use the same angle as this median line. That's about right. Change it to the right color so we can see what this is referring to. In fact, I'm going to just write. Someone asked me how you add text to a line. And the default tab when you create a line is the style, and that's how you change the color. But if you go over to the text tab, that's how you add the text. So I do sliding parallel, and I'll give it a number. I think we're on 5. I could be wrong. I can change this later. And I want mine on the left and in the middle. If you have yours in the top, you can see it placed on the top of the line. You can have it on the bottom of the line if you prefer, or in the middle like that. And because I can see price responding to this level here, I want to keep this on my chart. And we can see, look at this, as price comes back down, it hits this median line again. And look at it travel. It kind of channels between the median line and this sliding parallel. And then price breaks down below it. And we can see this sliding parallel, it acts like a kind of like a median line. And then the first thing I would do, as price breaks out above this, I would create a mirror. And I would place the mirror on the other side of this, on this sliding parallel. But as soon as price isn't responding to it, then I would remove it because it's not acting as a mirror, right? But what I am seeing, I think, is as price comes down to this level here, right, I would create another sliding parallel, and then we can see the distance between the sliding parallel and the lower parallel of this pitchfork. I would create a phase shift. Well, I mean, at the time, you wouldn't know whether it's going to result in a mirrored sliding parallel or a phase shift. And by the way, this is something this is what I go through in module 20. If you haven't got to module 20 yet, I talk all about phase shifts, the different types of sliding parallels. So as this is unfolding, I might create a mirror, and the mirror would be the same distance away from the median line, right? But I would also create a phase shift, and a phase shift is the same distance away from the, in this case, lower parallel, and I would copy it the same distance away from the median line. And this is just going by sight, but it looks like that's exactly the right distance. Let me just grab that. It's an approximate length. A little bit more, I think. This is obviously like an approximate height. No, it's about right. I think maybe a touch higher. Yeah, it's about there, right? And this is called a phase shift, right? So the same distance that price was short of reaching that next median line, we then add that distance on the other side, because as price starts to turn around and go back towards the next line, which is the median line, we can then add the phase shift, and I would add a little like I do PS, so it means phase shift. And in fact, this is why I number them. This is 6. So oops, sorry, I pressed the wrong button. Hang on. There we go. Okay, so I'll go 6, and then I will label this as 6 as well as a phase shift. And you can see it's beautiful. Price goes back the other way, and it bounces off that phase shift perfectly, and does it twice. And just to kind of illustrate what I mean by a phase shift, if I move the geometry, the pitchfork, you can see that the geometry has shifted, right? It's phase shifted. And you learn that in module 20 if this is new to you. And one thing I've also started doing as well is I've started, and this is just like just to kind of make it easier to see which ones the parallels come from, how they're connected. I will just do a little a dashed arrow like that, and let's make that a little bit brighter about there. And this is just so I can see which ones are connected. And I like it. You might find it makes your charts too busy, but it makes it really easy to see. Okay, yeah, that's a phase shift from the sliding parallel there. Now, I'm going to keep this one up here just in case price does come up. But for now, this is what we're working with right now. Now, I'm going to just pop back in the chat really quickly just to kind of see if anyone's messaging me, if I'm missing anything. David has just written a bunch of V's. And Charlie says, Andy, wave counting can be applied to Forex and indices. I go through this in the course. Wave counting as a methodology is about analyzing crowd psychology. So according to Ralph Nelson Elliott, Elliott wave can be applied to anything where you have a large amount of people in a crowd, right? And you get to see the patterns that emerge from crowd psychology, and where that is most powerful is financial markets. So Ralph Nelson Elliott discovered, created, whatever you want to, the language you want to use, his Elliott wave theory, in stock markets. This is before crypto, so that's where it all started. So the answer is yes. David says V for victory. yeah, I think so. I hope so. And again, I'm going to repeat this, especially because this is the last Wavecast of 2022. Any questions? Now's the time to go for it. Any questions? You want to show me a chart? You want to show me a trade you did? You want to show me a failure that happened? Anything at all? Now's the time. Show me the chart. We'll get it up. I'll share it. We can talk about it. We did this last week, and I think this was pretty cool. Other than that, I'm going back into trading view. Okay. So our regular pitchfork, the green, right? It was very, very useful in the beginning. And as price started to break down, we can see the price broke down below it. And then it came up and it pinged our first warning line really nicely. And it doesn't seem at the moment to be, price doesn't seem to be responding it as much right now as we start to get further out. So I'm going to just take this away just for now, okay, I think price at the moment is responding to our shift pitchfork the most. So I want to keep the shift pitchfork on the screen. So the current wave count has this as a correction, and I feel that is the case. And because this correction is following the geometry of a shift pitchfork, I get the sense that this pitchfork, this correction is weakening. And so there's a few ways of looking at this. And one is we've got an A and a B, and then we're looking at the unfolding C as we speak. And the current wave count I've got is a wave 1, a wave 2, and this whole thing up here is a wave 3. So we've got a wave 1, 2, 3, 4, and 5. And that makes sense when we look at the volume, and the biggest spike in volume, which is, I think it was Janus who said that last week the cursor was moving too fast and you couldn't see exactly what I was referring to. So hopefully you can see this. We've got the biggest spike in volume right here, right? I don't know if you can see that. And that biggest spike in volume, according to my wave count, would be wave 3 of wave 3 of wave 3. Now, I forget which module goes into that. I believe it's the wave counting with confidence module, which is module 6, I believe, right? So that's one thing that leads me to this particular wave count. And if that's true, then there's two possibilities. Either this is wave 4, right? Either this is wave 4, and then we've got a wave 5 here, right? A failed fifth, and then this is the beginning of the coming downtrend, right? And this would make this, if that was the case, then this would be a little wave 1, wave 2 correction. And then this is probably, wave 1 of the coming wave 3. Okay, that's one possibility. The other possibility is that this whole movement here is part of either it's a wave 4 itself, or it's going to be a wave 4 triangle, which I really hope, because if it does, it looks like it's going to find, it's going to end around this lower parallel, which would be really, really nice to see. So that's something I would be I'd be watching out for, something like that, and then a final push up. Those are the the second one is a short-term bullish outlook. So either this is a correction here, which is possibly. There's also a third possibility, and that third possibility is that this has come up close enough to the top of this for this to be a potential flat correction. And you can see here we've got a corrective pattern there, and then a correction up here, and then wave 1, 2, and then we've got a 3, 4, a 3, 4, 5 potentially forming. That's also a possibility. If this is a wave 3, we've got more volume coming in here, which, okay, and you can see I've drawn this potential base channel here, looking for that potential eventuality. So is that wave 1, 2? Is this wave 3? Let's do a prophecy extension now, just to see what we find. I hope you guys are following me on this. There, let's move that to the side, so we can get a better reading. And let's do wave 1 extension there. Okay, so look at that. On the nose, 1.618. So that could be the wave 3, right? Now this might continue. This might be just wave 1 of wave 3, but this could be a flat, right? That is perfect for a wave 3 prophecy extension. So we've got potentially wave 1, 2, 3. Is this wave 4, right? And then we'd be expecting a final move down as a wave 5, and then that could be wave 4 there, right? That could be the end of this kind of drawn out flat correction, in which case then we would see some divergence between the volume we see here and then the final push down, right? And that final push down would be, it could be the lower parallel of this this shift. Price seems to be responding to the shift quite nicely, and that's something we'll be watching out for. And yeah, so that's kind of interesting. I'm keeping my eye on that one, and then we'd be looking at a final, if this wave count is correct, our final wave count up, our final move up, and really until you break out of the lower parallel of the pitchfork whose geometry you're following, it's hard to. It'll be risky to trade against it. It'd be risky to do a short, for example, when you're tracking the price on a bullish pitchfork. So yeah, all those, the last three wave counts are all various different ways of bullish. The triangle idea is still like a little bullish, that move there, a final move down, and then we'll be looking at, you know, a final move up to complete this entire move. That's bullish. If this is a zigzag, which I don't really, you know, I'm not really feeling this as like a WXY, for example. Maybe either way, we'd be looking for another move up to the fifth wave. The bearish wave count would have wave 4 finishing. I mean, I've got wave 4 finishing like the ABC there, and then this is the fifth wave, right? This is the fifth wave right there, right? And this is why you can see I've got this 0.5 marked, which would be an extent, a trib-based extension based on this, you know, wave 0 to 3 to 4. And it doesn't quite meet the 0.5, but it definitely clears what you would expect to be the minimum for a wave 5. So that would be the bearish outlook. And if that's a bearish outlook, then we've got a wave 1, 2, and well, I've demonstrated that could be a wave 3, 4, and a 5. And if that's the case, that would be wave 1 of the coming move down. After that, we would still expect a deep retrace of wave 2. So to see, like, again, I'm not seeing any trade setups yet. The best trade setup is going to be at the beginning of a larger pitchfork, and then as price is underway, it's about looking for signs when that pitchfork is likely, the geometry that pitchfork is giving you an insight into is likely to change. And because this is a shift pitchfork, I'm already on the lookout for the trend changing, right? One thing that would make me uncomfortable with a short, that would make me uncomfortable with the idea that this is already the beginning of a bear cycle, is the fact that we've got such a large amount of volume in this move here. Now, you know, if we compare it to the three of the three back here, there's not too much difference. So because of that, I'm kind of thinking there's more to go on the upside. You know, could this be a wave 2 and a wave, like, if this is the beginning of a downtrend, this doesn't feel strong enough to me personally. If this is wave 1 and this is wave 3, sure, there's some volume. If you compare the volume of this wave 3 to this wave 1, it's not giving me enough, I think, to mark a trend in trend, a change in trend. So I'd be, you know, it's something to look out for. And if this is the beginning of a downtrend, 1, 2, 3, 4, we're going to get another move down in the 5, and that's going to be wave 1 of a higher degree of the move down, in which case we are going to get a move we are going to get a move upwards anyway. So even the bearish outlook would expect a move up anyway, and it just really depends on what the personality of that move up is going to be, right? If we're expecting an impulse up, we're going to see, it should be a really nice impulse structure. We should be able to map it with Kennedy's channeling technique. If we get a corrective move up, a nice zigzag or something very, very corrective, so we see something, we might do what we believe is a base channel, and then it doesn't break out of that base channel, and it remains corrective, and we start to see some beautiful divergence with volume and momentum. then we can start to look at this as a bullish correction, and then we can start to look for potential entries for to get into that potential short. So I'll give you an example. So if it does another move down like this, for example, and then we get a correction, I'm just giving you an example, something like that, right? And that correction stays in a channel like this, let's say, right? And it doesn't break out above it, and then price starts to come back down, and it breaks down below this channel, like there, for example. That's when I'm going to be looking for, or if I was trading a definite short. And definitely, if price breaks out above here as well, right, and it reaches the top of this channel here, then there is a potential a new pitchfork that could potentially be created. The first one might be well, there's a few ways to do it. We'll see how far price comes down here. I think you could do something like this, right? Something like that. Is that a regular pitchfork? That is. So could that be maybe? But I think that one's going to be the way it's going to go. Something like that. So there's no trade set up now in this time frame. We're looking at the 20-minute time frame. If you go down into the 5-minute or the 1 minute, then there's going to be more opportunity opening up in front of you. But in this time frame, I'd be, because we're I believe quite mature in this pitchfork. Price hasn't broken out above this pitchfork. I think it's going to pop down lower, and it's going to hit this lower parallel personally. And if it doesn't, then it means that it's likely that we've got maybe a triangle forming, or there's a few different wave counts. Either and my favorite are the ones where it comes down, hits this lower parallel, and then we've got one more move up, and that final move up, if we get it, I'd be then looking for the final pivot in a potential bearish pitchfork, and I'd be looking for trade setups. So hopefully you can see the difference between the kind of forecasting that I do on these wavecasts and actual trade setups. And module 21 is going to be all about trade setups. It's all about looking for those entries, how to look for entries, where to place your stop loss, all that kind of stuff. And that's not something that we do on these wavecasts. So let's go back into the chat. There's 18 of you here. So, hey guys, for those of you who showed up, for those of you who have just shown up recently and you didn't catch the beginning of the wavecast, I want you to, let's bring me back on camera. There we go. So for those of you who have just shown up recently, I want you to post an emoji that reflects your year so far. All of 2022. Post an emoji which best reflects 2022 for you. And for those of you who weren't here at the very, very start, this is the Christmas wavecast, because this is the last wavecast of 2022. Because next week I'm flying. Next week I'm flying back to the UK, and then the Monday after that, it's Christmas. And the Monday after that, it's like New Year, close to New Year. So we're going to jump on together. I think the Monday after that is like the 2nd, and I think I might be flying on the 2nd as well. So we're going to be starting the next wavecast is going to be like January the 9th or something. So this is the last time we're going to be together like this before Christmas and before 2023 begins. Mohammed feels like he's swimming. I think that's what that means. But yeah, that's all I've got for you guys for Bitcoin. Have you got anything else you want to show me? Anything else you want to ask me? Any questions? Any charts you want to show me? Anything at all? Now's your chance. This is the last time. Hit me up in the questions. Otherwise, we can wrap it up early. Carlos's mind has been blown by this year. Hopefully that's a good thing. Hopefully that's blown in a good way. Right, some people are writing. David says, thank you. Have a great Christmas. Yeah, you too. I hope you guys have had a great year. It's been a ride for many of us. The crypto market has been insane this year. It's just been a massive bear market, obviously, for the investors out there. It's been tough. For traders, and this is the distinction between trading and investing, traders, we don't care. The value of a cryptocurrency to a trader is the volatility, right? The trader doesn't care if it goes up or down. The trader just cares about the volatility. So for traders, it doesn't matter, right? So, but for the investor, it's been a tough year. For those of you who've been sitting on some bags and holding on while the price just collapses and collapses, and some of you unfortunately got caught up in the FTX insane situation, which was nothing short of fraud. It wasn't just incompetence; it was fraud. Sigmund, what was his name? SPF or God, whatever his name was, whatever people called him, literally took billions of dollars of depositors' funds and then gambled with it, right? And obviously he was thinking, oh, well, what we'll do is we'll gamble with it, make loads of money, and then we'll be happy, everyone's happy, and that's not what happened. He took that money, gambled with it, lost it, and it's absolute fraud. It's incompetence, obviously, but it's downright fraud. And unfortunately, I've seen some messages from people saying they lost insane amounts of money. It's heartbreaking. And the only silver lining, not for obviously anyone who got caught up in it, the only silver lining for the community, the crypto space as a whole, is it's a learning experience for everyone. And I think my personal take is this is like people who are pro centralization say, oh, we need more government regulation, and that to me flies in the face of the spirit of crypto. I believe that the regulation should be like light touch, and I think that what this shows is that it is actually the danger of centralization. I think this just gives more credence to the necessity for decentralized platforms, decentralized exchanges, where your tokens are not held by the exchange. It's non-custodial. So every time you interact with the exchange, it is interacting directly with a wallet that only you control, because only in that situation could this not have happened. That's my personal take. Paul says, question Ari, third wave of third waves. Is it third of the third of the third, the most volume, or just third of the third for max volume? It's not a rule, right? It's not a rule, because typically the third waves have most volume. But if you have an extended fifth wave, then that extended fifth wave, by virtue of being extended, often has more volume than the third wave. But Elliott wave principle, Elliott wave theory is fractal. So the answer to your question is, if it follows a textbook structure, then it will always be the third wave of the third wave of the third wave of the third wave of the third wave forever, until you run out of liquidity, right? But when you're looking at it in a time frame where you can't see the breakdown of a third wave, it just looks like a spike, then in your time frame it will just look like that third wave. But when you go down into lower time frames, in fact, let's just do an experiment to see if this still applies. Let's go into trading view again. And let's explore, right? So this is in the 20-minute. If I go down into the 1 minute, let me just so I don't get lost. Let me just mark that, right? And then we'll go down into the 1 minute, and let's explore and see if it applies still. So let's try and find my vertical line. And let's bring the volume back, okay? When I'm streaming, it uses all the processing power this computer seems to have. So it's a little bit jerky. Has price run out there? Okay, let's try the 5 minute. Maybe that's going to be easier for us. Okay. So now we can break down if we look into this wave 3, you can already see it, right? You guys can already see this. Okay, there we go. So this is our wave 3 that we've marked. Okay, if we look at the subwave structure of this wave 3, look, you can see, right? That's the volume. Look at the volume. The volume is on the third wave of the third wave. And if we break down even more, you can see that the spike in this volume is not at the tip of the third wave. It's the third wave of the third wave of the third wave of the third wave of the third wave. You get the idea, right? This is the beauty of fractal Elliott wave, right? It's kind of cool to see. So that's a cool example of it. Sam Bankman-Fried. Yeah, for some reason I want to say like Sigmund Freud. I don't know. It's clearly, obviously not him. Sam Bankman-Fried. Thank you, Shaman. So Paul, hopefully that's kind of cool to see, right? So it's always, not always, in a regular impulse wave structure where you've got often it's the third wave that is extended. The volume tends to show up in the third wave of the third wave of the third wave of the third wave, like most of the time. And this is why the very first trading plan that I gave you guys when we were just focused on Elliott wave was the fifth wave. Why? Because once you get a spike in volume, there's a high probability that's the third wave, and then you've got one more wave to come, right? And that's why that's the first trading plan that I gave you guys. Now, as you start to get into modules 18, 19, 20, and then when we get to module 22, the trading setups I'm going to be giving you guys is incorporating Andrew's median lines into your trading plans. Raj Kumar says Sam Bateman-Fried. Is it Bankman or Bateman? I think it's Bankman. I'm going to go with Shaman on this one, but we could both be wrong. Marcus says, thanks, Andy. Have a good one. If you're coming back to the UK, bring a big coat. Bloody freezing here. Yeah, Martin just told me it was snowing last night where he lives, and I'm sunburned. Like, I know this is like, boo-hoo. No one's going to sympathize with me, but it's been really, really warm here in Tenerife. So yeah, I'll be wearing a jacket once I get back to England next week. Yeah, all good, Paul. So yeah, let's wrap it up then. If no one's got any more questions or nothing to show me, so thank you for a cool, awesome year, guys. Shirley says thanks and have an amazing Christmas. A little bit of housekeeping quickly. So tomorrow I'm doing another Lionosphere live stream where we talk about the community and everything else. So if you can make it for that'll be really cool to see you there. And I'm going to be explaining or sharing or discussing what we might be doing with the community in terms of the update that happened with Mighty Networks, because you can see it's all changed. And I've got some really cool ideas that I want to share with you. So if you're around tomorrow, I think it's around the same time, or it might be at 7 p.m. UK time rather than 6 p.m. So yeah, if you can be here tomorrow, that'd be cool. We can hang out and we can talk about what's coming in the community. So wicked, right? That wraps that up. So that's for Christmas and New Year Wavecast episode 12. And yeah, so that's 2022. So thanks for being here. Thanks for being on this journey with me. So all of you guys are, wave counting immersion students, and I think 2023 is going to I know 2023 is going to be in a really exciting year. I am committed to doing everything I can to get all of you guys becoming consistent crypto traders. It's going to happen. If it hasn't happened for you yet, it's going to happen in 2023, and I'm going to do everything I can to make that happen. So thanks for being here, guys. Really appreciate you. And I'm gonna speak to you guys in the community. I'll see you tomorrow in the Lionosphere live stream. Other than that, for everyone watching this not live, they're watching the recording. And if you don't catch me on the other live streams, have an amazing 2022. Have an amazing Christmas. Sorry, I should say the rest of 2022. Have an amazing, beautiful Christmas. Have a great New Year's Eve, and I'll see you in 2023. And for everyone else, I'll see you in the Lionosphere tomorrow. So much love, and take it easy, guys.